Goldman Sachs raises its S&P target for the next 3 years as our futures are off small. Apple's Tim Cook heads to the Hill to talk about corporate tax practices. Then on Wednesday, we hear from Fed Chairman Ben Bernanke. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So after a small down day in the market and quiet sessions around the globe, Goldman, as we said there in the intro, raised its 3-year estimates on the stock market. So what do you think about that, Scott?
I do think that it's good that they came out and gave a longer term horizon on the stock market. So this way people can say, okay, I might have missed a big move, but this move can continue. One of the reasons why I came out, over a year ago and said S&P 1700 when everyone out there was saying equities are dead, people were saying Europe was going to implode, which we've always had all these problems, was for people to say, okay, with a long-term macro plan, I can make money, but it has to be suitable for me. With that said, so it's always good to plan ahead, but unfortunately, Brittany, what we've seen time and time again now in the overall world is there are some things you can't plan for, whether it was in Connecticut or what's going on in Oklahoma. I think the two of us would just like to send out our prayers and thoughts to those affected in that region. Hopefully you're doing as well as you possibly can be. The pictures are crazy what's coming out of that region. I know our hearts definitely go out to everyone there.
But of course, we're here to talk about the stock market. So if we get back to that, can you show us what levels you're watching as we head into today?
Yeah, so going back to time frames, longer term, I do think we can trade higher. On an intermediate basis, it's tough and tricky because of the accelerated nature of this market. And if you look here at the chart, you will see that two different trends exist. One being right here on the chart, that comes in pretty smooth down that started here in November. Okay, and this trend has been intact for multiple months, besides the macro one, which goes back, even further. But then recently, ever since we tested the 50-day right here, we've been on a very accelerated trend line that still hasn't been violated. We're still above the 8-day, we're above the 21-day. And at those points, it's always hard for a prudent, risk-averse trader to sink your teeth in. So yesterday, what did we got? We got a small, if you call what you want, I'll give you a close look, a small, people are like, oh, red dog, is that a red dog reversal? We traded through the prior day high of 1667, closed below. I'm like, yeah, a little bit, but not drastic, not severe. So if today we close below 1663 and break our 18 up Tuesday streak in a row, perhaps maybe, we could be heading for a retest of this area, which would come in somewhere around 1636, which I do think, or 1640 would be embraced by bulls and bears, because whenever things are this pent up, it's kind of hard to stay with any type of size.
Oh, we saw some exciting action in China-based solar names yesterday after JASO posted earnings that beat and ignited the whole group. How much will you be paying attention to this group today?
Well, I think that traders have been paying attention to it for the past few months. And then, with the amount of shorts in this group and the lack of disbelief, you get something like we started at a JASO yesterday, and you look at this one that has basically been left for dead. So here you have a really nice move, after it's come off the low. Everyone thought this was a big move here and here, and what did it do? It cleared a really big technical level. Okay, it actually gapped above it. But if you go to the weekly chart and look where this came from, look at this little day. That's all this was in the scheme of what this was way back when. Okay, this group used to be really, in vogue and in play, and this was the last trend here that broke to the downside. And then now, you have a group that's looking for follow through. So this looks like you could see 11, and then at some point maybe even to the 200-day at $20. So what you want to see now is some commitment to this. So as far as this huge move, it's almost like you want to make sure that it keeps the top third. So if it can stay, just say above $9 for a little while, I'm sure traders will be looking to add to this through yesterday's high. But it might take a few sessions to digest these type of gains.
Yeah, well, as we said, a lot of names were lifted yesterday. First Solar got back in motion after a few days of rest, breaking out again and gaining 10%. And this one has a high short interest. So do you think we'll continue to see shorts get squeezed in the coming sessions?
Well, this is interesting to look at, because when this ignited, a few months ago, it digested for 5-6 days when the market was pulling in. A lot of us were focusing on it. I was long a little bit. I know Sperling had it, was talking about it because he likes to gravitate towards the solars in the group. If you look here, this was that first day. You go back here, boom, it was right, this igniting bar right there, okay? And I think these lines were what I drew here way back then. So here's your igniting bar. What did it do here? It held the top third, went sideways, and then this is when it cleared this pivot, which was at that point 41, gave you a quick, nice move to about 46. And then I do recall, came out with earnings, and at this point, a lot of people said, okay, it's over for this stock. Earnings came out and just engulfed this upper flag, and what happened here? No downside follow through, and then it took out that high, and then here you go, another flag type pattern, and it extended on the JASO numbers. So at this point, it's trending higher again, and if you go look at the weekly chart on this one, look where this was. Okay, this one's coming back a little bit more. It's working its way up to the 200-day. Maybe this does see 75 at some point this year. So I think traders are going to try and stay with this group because when they move, you can get rewarded with the size of the ranges.
And SolarCity made a big move yesterday, gaining 15%, and this stock was already making big moves.
Yes, this is part of that whole little that little cult of the heavily shorted stocks with the unbelievable owner. And if you look here, you will see. I know yesterday I lost some money trying to short this because it gapped up. I thought maybe this would be an exhaustion gap, and it wasn't. It closed somewhat strong. So today, who knows how it continues? This is your pivot. If you're short and it goes through 52.77. You probably should cover because you never know. There is absolutely nothing here. Look, nothing to your left. That means the sky is the limit. So you got to be careful. You have to have a level versus a level. So I know it's come a long way, but ultimately, who knows where these things go? That's why you have to be prepared with levels. So this was one level that got taken out in SolarCity. Now it's a little extended. If it were to trade above this, there are some people going to be looking for longs. They might say, okay, this can continue for multiple days. So right now, 52.77 is your pivot. If it trades through it, maybe comes back below it, gives you a little bit of a red dog reversal that way. Maybe then you have a cute short to trade against, but overall, still looks strong, still on the move, and don't have opinions with this one.
And SunPower has been on the radar since it broke out of the descending channel on April 24th, and it broke out to a new 52-week high yesterday, so perhaps some continuation today?
This is probably one of the reasons why there are a lot of traders out there, because I know individuals on my desk were looking for this to go. And I'll name her Taylor. She's been an unbelievable trader. She's doing really well. And she was like in there during the times when it wasn't quite ready, and then she made decent money there. But you look back at something like this that had a really nice descending channel here, and I think we were all focusing on it right around here. And it was a little choppy in this whole mess. So I think making 10, 20%, you're like, okay, that could work. But then it ignited again, and now look how much more accelerated this move was once it broke above 16 to 22.70. So overall, these things trade with really nice patterns, and this was a quick move, another consolidation, and then it's been stair-stepping higher. It's away from the 8-day. I think the same mantra goes for all these solars. Use yesterday's high as a level. If it trades through, perhaps you get a cute long, but these things have come so far that I wouldn't sink your teeth in, and if we do get some kind of stretch, pull back, topping tail, then maybe you could try and tactically be short, but tactically being short has not been working yet.
Exactly. A lot of shorts got squeezed in Jinko Solar yesterday, gained 20%. Could more shorts get squeezed here? How much room to the upside does it still have? 20%.
Right, and this one was a day one out of a consolidation, so sometimes day one gets day two, day three. So you look here at this chart, it also had a wedge type formation, right here. So it was getting ready to go. The 8-day curled up, the 21-day curled up. So it was almost primed for a move, and a move it did have. Here's your next point of reference in this one. You go to your weekly to see what this was back in the past. Okay, and back in the past, again, this this had a lot of money involved. So with that said, this is when this this stock broke to the downside. Okay, now it's coming into some resistance, or it's not quite there yet. So it'll be interesting to see, can this take out this pivot here in the coming sessions at around 10.07, and if it does, no reason why you can't see something like 14 over sometime. So this solar group, could continue if it wants to. So I know a lot of people say, oh, it's dead, it's government subsidies, it's this, it's that. Look more at the price action versus what people say about them.
All right, well, huge reversal in the metals yesterday. We're going to go in the trenches with gold and silver right after this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, You can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
The metals exploded on a huge reversal yesterday, with some reporting that it's the result of short covering. What do you think about that, Scott?
Well, it's a little bit of both. You know, you have gold bugs that think the metal was cheap and got beat up, you know, with undue, whatever the reason is, and then you have technically, you know, we hit the reactionary low that we hit, you know, when we broke the macro support. So you put them both together, and it was a pretty big igniting move. But one day doesn't make a new trend. But when you get an igniting move, you need to measure the next few days, which sometimes are more important. Right.
And in terms of the GLD, you know, some believe that it hit a level that didn't break, and that's why the shorts got scared.
Yes, and if you look right here at the chart, you'll see, you know, we talk about inflection points, we talk about pivots, and, you know, right here, when it broke this 161 on the intermediate basis on the GLD, some people got out of longs and some people got short. You had a quick move down to more macro support, same way it had a little bit of a bounce off here because it was the first time here in a while, bounced up, failed, then it broke. Remember that Friday, it broke 148.5. Look at the size of the move to the downside, all the way down to, what was this low? This low was 130, this was like 130 and change right here, okay? 130.51 actually. So
I'm
we'll
Evan
take
Lazarus,
a close look
Chief
now,
Knowledge
you know,
Officer
just to take a
for
look at it.
T3Live.
So we opened up into that area, and when that area held, anyone who's been short for a while said, oh, maybe this is it. Maybe we have a double bottom, which we talk about in technical land. So we wanted to see what type of bounce, and it was pretty powerful. It took out these 2 days, you know, it closed above both these highs, but then today you walk in, gold's down, the GLDs are down. So I would say you go to your 5-minute chart of the GLD to see, you know, where support was from yesterday. Okay, this was the big move, and, you know, we're coming into it. So I would say this is where you want to see GLD hold. What you want to do is you want to see half, okay, at least half. I think some people were expecting follow-through. So those people who took it home long, you know, from a short-term basis, you know, you're probably a little frustrated this morning. That's what's been going on in the metals. They don't give you, you know, follow-through typically. Sometimes it's more random. But anyway, so, you know, if this is going to be any good and lead to any more upside, I would think that, you know, this level holds. And this level right around here is somewhere around 133-ish. So 133-ish holds. You take some, if you played it long yesterday and sold it on the close because you don't take it overnight, you know, those type of people might be looking to take advantage of this down open, but if it doesn't hold here, it was just a, you know, somewhat of a one-day wonder.
Well, the SLV bounced as well and was able to reclaim its first key moving average. Do you think we'll see a further rally there?
It's, you know, same mantra. Okay, this has been battered and bruised, and this actually opened below, you know, that level, the reactionary low, and then engulfed it and went right back above. So if you look here at the chart of silver, this too, similar pattern though, when this broke this symmetrical triangle to the downside, and then when it broke this macro support right around 26, you had a gap down, there's been absolutely no traction. And then yesterday, finally, you know, you had something very engulfing. You haven't seen a day like this in a long time. You could look all the way to your left here, not a huge engulfing day. So it opened below support, came back above it. I would say for this to be any good, you'd probably want to see it hold, what's this, this high here is like, you know, 22-ish, you know, somewhere around 22 or maybe 21.40. You want to see half of this hold for perhaps another move at some point to break this small descending trend line. But at this point, you know, this whole metal group has been broken, and, you know, the bugs have been bugging out, and, you know, the technicals though have been pointing the way. So at this point, let's see if we could hold higher, and then at some point maybe get some follow through. But for now, you know, it still has a lot to prove.
Well, what levels would you say you're watching in the GDX, which gained 7% yesterday, had a nice snapback?
Well, this too. This has been filled with so many one-day wonders, and it's been, you know, new low after new low, and then so when finally you get a engulfing bar, you want to see what type of engulfing bar, you know, will take place here and what it'll lead to. And here you will see that, you know, this too has been pointing lower. Okay, so many different areas that you could have gotten out, you know, along the way, you know, where Look at this trend to the downside, never broke above it. Every time it hit it, it was more of a sell versus a buy, and then here broke below, came back up, then continued lower. So look where we are. So people think that, you know, you could bottom feed and try and catch a trade. Well, if you did it yesterday, you made some money, especially once it cleared the prior day high. So now I would say same type of thing. You know, you want to see it hold at least half. So you want to see some commitment to this type of move. If it holds half, maybe at some point, you know, it tries to head higher, tries to regroup, you know, and hit bigger resistance. But at this point, one day doesn't make a trend. And I know I said you don't short an igniting bar because sometimes it leads to something more. So I would still stand by that rule. At this point, you need to measure the commitment, and so far the commitment really hasn't been there. All
right, so how do these rules apply now to silver wheaten, which also had nice gains of 7%, but closed on highs? So maybe possible continuation today?
Well, people were looking for that. You know, they probably went home, like short-term traders, the good book says something closes on the highs on a major reversal with some volume, you take it home long. Today you come in, it's down. Frustrating. You know, that's the key to this market has been frustrating, and try not to let the frustration get you. I've been a little frustrated myself lately. So you look here and you see the type of move that this had, you know, was somewhat strong into a big range. You would have hoped for a gap up, you didn't get it. So now see if it, again, holds half of it, and then potentially could take this out. But at this given point, you know, I just think that uncommitted shorts said, oh no, we didn't break a big level here, let's cover. So now we need to see if there's any kind of real commitment and real buying.
All right, let's do some quick hits here and talk Apple. Nice day yesterday, gained 2.2%. Back at that 445 levels, which will be interesting to see if it can hold.
Yeah, you know, we'd like to see some commitment here, and this has been very choppy. It's been very frustrating that the move from 700 to the lows was so fast and so furious and knocked the teeth out of even long-term Apple investors. So, you know, there have been some trades along the way, some tradable moves to the long side, but most of them have been sold, and you could have made more money being short. You know, I know I've missed a lot of opportunities trying to, you know, not being short, just playing the bounces, but, you know, that's what I feel comfortable with. So you look at the chart here, you know, here's the move from 700. This was an area to get stopped out. This was an area to get stopped out. And then you had a few bounces that got contained by this trend line. This one we broke through. And then remember, it didn't hold, came below. And then we had a really nice trade around this 420 right there. And then it came back, retested. So at this point, you know, I'm thinking this could be an inverted, you know, head and shoulders pattern where here's your right shoulder. Yesterday, it was up nicely. But, you know, this morning it's down like $3, $4 or about 1% because of the news that, you know, Congress is saying that they had, you know, these shelters in Ireland that weren't so kosher, but they weren't against the law. So we'll see what happens today. I think the hearing starts at 9:30. I'm long some. I will use this as a stop. I would think if we get a close back below yesterday's low of 430-ish, it's not going to be pretty for short-term traders. Here is your line in the sand. I'm hoping that we hold around the 50-day, start to get stronger, you know, in the next half an hour, and then, you know, the hearing goes well, and then we could actually trade more and break this little trend, and then at some point break this bigger trend. But sometimes the right shoulder takes time to build.
All right, now Google is still digesting recent gains pretty well. How strong does it still look to you at these levels?
Well, yesterday you saw Priceline take out, you know, all-time highs and extend. Google tried to, didn't have enough power. You look at the chart here. I wouldn't read too much into it except for that at these levels, it's hard to find, you know, full momentum. This was your descending channel that some took as a core trade. From here, it's been just stair-stepping higher, and now you have a small range up here. It tried to break out yesterday, couldn't find the power. Maybe it just needs a few more days, so I wouldn't be too worried about it. It's above the 8-day. I would say, though, if it were to break below this 900 area, maybe, you know, it corrects a little bit more, and that means the market's probably under some pressure. So I'd watch this upper range here, you know, see if it needs time, or if maybe you do get some kind of corrective activity, which I think people would love down to this level that could be buyable. You only had it a few times this year.
And Tesla taking a break after its monster move, but probably healthy behavior, right?
Yes, at this point, it'd be great if it could just hang out in this upper range a few more sessions and, you know, get more coiled, so to speak. So this way, if we do see another move, you know, we could sink our teeth into it. You look here at the pattern here; it's been unbelievable. You know, lots of people love this vehicle. I think the stat is out of every, you know, I think 25% of the people that test drive it buy it. But anyway, here's a pattern here. You know, this to me is pretty big, nice support. Okay, right here is 87.50. The longer it stays above 87.50, the higher the probability we get a nice trade that could start above 92.50 to 95 to take out 97. If we were to break below this, some momentum would leave, and then maybe we get a test of the 8-day again, and then perhaps this wedge has to get bigger because look at the size of it and the move that it's had. So I don't know if it's strong enough just to go right here or if it needs more time. So at this point, if you're long it and not committed, use 87.5 as your pivot. If it holds here and then starts to break above 93 to 95, that could be the potential momentum trade that some guys like me are looking for.
And Molycorp woke up yesterday after 5 days of rest, closed the day up nearly 11%. We'll be looking for continuation today as it closed on highs.
It'd be nice. You know, this group has been left for dead. It ignited on earnings. It slowly trickled in. You look at the chart here. You know, I did buy this yesterday. You know, it was up decently at this point. You know, it broke this small little flag type pattern. You know, it held almost, you know, we had tested the 8-day. You would have thought it could have held higher, but whatever. So now at this point, you know, let's see if we can clear this prior high here, which is around 792. You look at the weekly chart, this used to be a darling. So from the 80s and the 50s, it's just flagging and getting some attention down here. So, you know, look what the moving average is around 10 bucks. I don't think that's such a crazy target for this one. Now,
how about BIDU? Triggered your buy price of 95, went as high as 100. Where's next resistance?
You know, this one, you know, you got to, it's funny the way it happens. We talked about it in the morning call yesterday. You know, yesterday I came in flat because of clearing stuff. So I'm like, let me day trade some stocks and figure out where to make money, like, you know, more of a, just a younger trader that doesn't hold positions or a portfolio approach. And this one was a great vehicle. You look at it, you know, it was a flag type pattern. It broke above this 95 with authority, and then it broke above, you know, this area to get into the, what's it called, the gap here that still has room. You know, but you have the 200-day right there. And, you know, for me, you know, I took the trade probably somewhere around here. It was decent for me for cash flow. If I was more in swing mode, there was really no reason to sell it. And now it closed up, so I would say, you know, if we could hold the top third of this, if we were to trade through yesterday's high, you know, today you could see a move to fill this gap upwards to 105. But really, yesterday was the meaty trade. Now the question is, can you get any follow through?
All right. Well, we do have a slew of retailers reporting today. We've got Tim Cook testifying. We've got tomorrow. We have Big Ben. What will we be focusing on as you head into today?
Just to see if the composure stays the same. So far, the market hasn't given you much reason for it not to. I talked about we haven't had a close below a prior's day low since that jobs report in early May. So if for some reason we don't have 19 out of 19 Tuesdays, maybe, you know, we do see a little bit more of a pullback than we're used to over the course of the last month. You know, but overall, I do think that equities are performing really well. You have a great rotation. There's more money to be made from the long side versus looking for these cute shorts. You know, I think really, you know, if you missed a lot of this move, if we do get some kind of corrective activity, write down a list of things that you might want to buy, get more into a portfolio approach, and try and put a little bit of more risk on maybe than usual, and then maybe your benefits or your trades will be a little bit bigger if you're not happy with the results you're getting now.
All right, well, happy trading, everyone. Have a great Tuesday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.